Welcome to Perspectives from HSBC. Thanks for joining us. And now, on to today's show.
Hello, and thank you for joining us at our new series on Perspectives. We are thrilled today to have Rob Fauber, the CEO and president of Moody's. I've had the pleasure of knowing you, Rob, for almost 2 decades now as a good friend and neighbor, and really excited that you were able to join us here in Hong Kong for our big, it's not our premiere, it's the second time we've been doing this conference, GIS, and it's hopefully you're feeling the buzz. I don't know.
Yeah, it's great to be here. It's the first time in the conference. I lived in Hong Kong a number of years ago, so it's great to be back. But I tell you, coming from the United States, it really showcases what's unique and powerful about the HSBC franchise. So thanks a lot for having me.
Absolutely, absolutely. Now, there's loads of folks that probably don't know much about Moody's and much about yourself. Why don't you start with yourself and your journey to Moody's?
I started my career on Wall Street at Salomon Brothers, then became Citi, and I moved over to Moody's back in 2005. And we had just recently become a public company. So we spun out of Dun & Bradstreet a few years earlier. And I went over to Moody's to run their corporate development group. And I remember when I left Citi, somebody said, why does Moody's have a corporate development group? What M&A is Moody's doing?
Were you an M&A banker at Citi?
I was, and it was a fair question. But shortly thereafter, a few years later, we set up the analytics business. Okay. So we set that up in 2008, and we grew that business both
right around when the financial crisis was.
Yeah, tough time to do anything, actually. Yes, tough time to do anything. But we set that business up in 2008, and then it was a combination of both organic growth and acquisitions. We probably did 40 acquisitions over the years.
But data and analytics, you really saw the ball. You just knew that this was the future, and you guys needed to set yourself up for it.
We did. Now that business is about half of our revenue. Wow. So ratings is about half, and our analytics business is about half. And Berkshire Hathaway came into our stock at the spin.
Not a bad shareholder.
They're our largest shareholder, and we're really proud to have them as our largest shareholder.
Excellent.
Yeah.
So as part of running business, being involved with business development your whole career, basically, and so you've played a crucial role in building this company. Yeah. So it's the natural path that you would lead this company. When you think back on all the deals you've done in your career, what deal have you been most proud of?
There were a few things. So one of the first things I did when I joined Moody's was set up our rating joint venture in China. It's a company called CCXI, and that is now the leading rating agency in the domestic debt markets in China, so that has sustained and been a great investment for us. Can I give
please,
two? Is that okay?
Yes.
All right, two. So back in 2017, we believed that data on private companies was going to be very, very important. So we acquired a company called Bureau van Dijk that had a huge company database. We since invested in that. That is now one of, if not the largest company databases on companies in the world. It's 550 million companies and counting.
And what type of data are we talking about? Yeah,
so it's firmographic data, it's financial data, and then it's all sorts of other data about these companies. So we then acquired a company in 2021 called RMS, which is the world's leader in catastrophe and extreme event modeling. So it was funny, Danielle, because I was on our earnings call. I was on our investor presentation. The day that we announced the deal, it was a $2 billion transaction. And the business grew at 1%, and we paid 32 times for it.
So not cheap.
Not cheap.
And loads of scrutiny from your shareholders,
Not cheap.
I'm sure.
And I got on the call, and there were some grumpy analysts saying, why did you do this? Why did you pay so much for this business? And a bit like what we did with Bureau van Dijk and the private company data, we had this thesis that we were going to need, our customers were going to need.
And who are those customers that you're thinking about?
We've got 2,500 banks. We now have about 1,000 insurers and brokers.
And they probably didn't even know they needed this data.
Exactly. So that was really the thesis, was that we needed industrial strength weather and climate modeling capabilities so that we could understand the risk of financial loss from an extreme weather event, and not just to serve the global insurance industry, but to serve banks, right? Who are underwriting loans secured by real estate and want to understand what the risk is. And so that investment
Super powerful.
Yeah, we went from 1% growth to growing, mid-teens in the last quarter.
When you think about, risk, you guys help everyone manage risk. We're a bank, we're in that business. We lean on your tools, right? And folks like yourselves, weather, cyclicality and weather and unanticipated events is kind of, it's now a natural occurrence to think about fires and storms and flooding. And these are not things that we thought about a decade ago, or certainly not to the same degree. Right. And in general, you guys have written loads about exponential risk. Maybe talk to us about what that means and how you think about it.
Yeah, so let's zoom out for a second and think about back to those customers that we talked about. So our customers are the world's largest banks, insurers, corporations, and asset managers. And we all understand that we live in a very interconnected and complex world, right? And that risks are not siloed, but they're interconnected, and they interact with each other, and they can interact in unexpected ways and have more severe consequences than people had expected. And it was interesting, when we articulated this idea of exponential risk, I think we articulated a challenge that our customers were dealing with that they didn't know how to verbalize. And so we're now in an environment where our customers want to understand much, much more about who they're doing business with, right? And I'll give you an interesting story. I was meeting with the head of digital transformation at a big European bank, and they said, Rob, at the time that I'm underwriting a loan or starting a relationship, I have to understand three things. I have to understand, can I do business with this entity? Do I want to do business with this entity? And are they going to pay me back? And I have to make that decision up front and then throughout the life of the exposure. And so it's interesting also, if you think about the pandemic, it was kind of the ultimate expression of exponential risk. Because let's think about what happened, right?
Did you get a massive uptick in demand, in product acceleration, in cross-selling? Like, was the pandemic for you this major inflection for your business?
It was, and it started with a much greater demand for our insights, right? So you think about our ratings business, we cover $74 trillion of rated debt, and in every country, in every sector around the world, and there was tremendous demand to understand how the pandemic was affecting countries and industries and companies, and how all of that was then interacting and what the first and second and third derivative impacts were.
Do you get paid for those insights and expertise, and on top of what was already your, whatever subscriptions people are on?
Yeah, the way we end up monetizing that is there's just much more usage of our products.
Got it.
Right?
More stickiness, more attachment.
Stickier, and ultimately translates to our ability to pass through value-based pricing.
74 trillion of rated credit products. We just came from that credit panel, private credit panel. Private credit is largely unrated. It'd be interesting. I'm sure loads of folks who are tuned in, I'm curious how you're thinking about that evolution, because insurance money, which is really powering this private credit boom, really needs a rating. How do you think that plays out?
So it's interesting. You think about the heritage of our company. For 115 years, we've been providing ratings mostly to the public debt markets, right? There's a kind of a secular debanking trend, which means that assets are moving from bank balance sheets into investors and capital markets. And the way I think about it is that just like we curated an ecosystem of methodologies and data and scorecards and research and ratings to help investors be able to assess public credit, we're going to do the same for private. Now, the disclosure may be different and who we share things may be different, but for this market to go from, call it $2 trillion today to anywhere from $5 to $10 trillion over the next, call it 10 to 15 years, it's going to need the same foundation, right? It's going to need data, it's going to need benchmarks, it's going to need some form of trusted, independent credit assessment. So we've got a role to play there.
And what do you think the market is missing in private credit? Are you getting lots of calls asking for assistance in double checking the underwriting standards, or like how is that demand filtering through to the conversations you're having?
Yeah. So imagine you are an LP, and you've invested in a number of private credit funds, and so you're getting the reports from the GPs, and you want to understand. You may be getting an assessment of the credit risk in those funds from the GP, but there's a natural conflict of interest there, right?
Yeah.
And so we've heard from a lot of investors who say, hey, look, I want to be able to get an independent third-party view of credit risk. And so, we have all of the tools and capabilities to do that.
Yeah, absolutely. Absolutely. What is the when you think about what gets you super excited about the business in the future and the direction? It sounds like that climate business has been spot on. It sounds like quite prescient in building up a lot of the data analytics capabilities that you've got. Private credit could be a huge boom. What are kind of the vectors out there driving growth for you?
When we look across the business and look at the big drivers of demand for our data, for our analytic tools, our models, our research, first of all is private credit is a huge opportunity. We see that as a big tailwind for our business. Second, you've got you've got huge financing needs for years to come. We think about the $2.5 trillion that's got to get deployed for funding digital infrastructure over the next, call it 5 years. You think about companies' investments in transitioning to a lower carbon economy. And while some of the landscape may have changed, the direction of travel is still towards.
So ESG is still a driver?
I'm not going to call it ESG. I'm going to call it decarbonization of business models. I think that's different.
Okay.
And there are trillions of dollars annually that have got to get raised to fund that, right? So as you think about fossil fuel companies investing in renewables and all of that, right?
It's amazing here in Hong Kong, just over the border in Shenzhen, EVs everywhere, and you don't hear anything, and just the pollution is just absent. It's wild to think about how quickly we've come to this place.
Yeah, it is, and there's still a lot of investment that's still got to get made, and you also think about as there's a shift in the source of energy, there will have to be investments made in transmission and the grids and all of that, and that's going to be measured in trillions of dollars. So it's a number of drivers of demand for investment and financing that is great for our business. And the other thing I would say is that AI is a tremendous unlock for a company like ours. You think about what we've got at Moody's. We have a massive data estate.
Yeah.
Right? We've got $74 trillion in rated debt. We have the world's largest database of companies, 550 million companies.
550 million companies.
With 2 billion ownership links. It's a lot. We've got 500 million economic time series, 20 million commercial properties. The list goes on and on and on, right? So it's a massive data estate.
Which segments of that have exploded the most of late?
The private company data is in huge demand.
Yeah.
And the fastest growing use case for the private company data is around know your customer and third-party risk management.
Got it.
Right? So this, again, goes to the customer onboarding. What's interesting, Danielle? It's moved from banks to corporates because when Russia invaded Ukraine and we had sanctions, all of a sudden, you think about every American company had to make sure they were in compliance with sanctions.
What keeps you up at night? Like, you're in the business of exponential risk, so what keeps you up at night for your business?
So it's funny, I got asked this at a town hall the other day, and I said, the obvious answer is to talk about what's going on in the world around us and what does it mean, and yes, we're trying to navigate that. Cyber risk keeps me up.
The Wiz acquisition was super interesting.
I certainly understand why Google is doing that.
Yes.
Right? And with the advent of AI, it just accelerates the ability for criminals to be able to attack companies and engage in all sorts of nefarious activity. And it's funny because at the company I said, I'm no longer going to use terms like threat actor. I'm going to use criminals, cyber criminals, because if you think about it, we have cyber criminals that are attacking your company and our company and every other company around the world 24/7. And all it takes is one
weak link.
vulnerability.
One vulnerability.
So that does keep me up at night.
Wow, me too. What else do you want folks who are tuning in to know about yourself and Moody's?
That's a great question. I guess I'd just come back, Danielle, to there's the Moody's that I think a lot of people think, they think they know Moody's, and that's the ratings business. Mm-hmm. As I said, that's half of our business. Mm-hmm. And the other half is really leaning into helping our customers, banks, insurers, corporations, and investors to navigate this complicated, interconnected world that we live in. And we've been investing heavily to build out the capabilities, the data, the analytics, and the AI to really, really help our customers not just manage the risk in the world around us, but to really be able to capture the opportunity, because they really are two sides of the same coin.
Totally. We'll play offense and defense at the same time.
That's right.
I don't know if you've coached Jackson in lacrosse, but you've certainly been a fan for all your kids with their sports, so you know it well. It's offense gets all the glory, but defense wins the games, right?
That's right.
Well, look, we're thrilled that you joined us here today and in Hong Kong for this conference. So thank you. Thank you for your partnership. Thank you for your friendship. And we will hope you'll be back in Hong Kong maybe next year at this event, if not sooner.
I would love to. Thank you very much, Danielle. And thank you to HSBC for having me.
Great. Thank you.
Thank you for joining us for this episode of Perspectives. Make sure you're subscribed to HSBC Global Viewpoint to stay connected